UPS has a problem.
Yeah, I mean like this?
I don't think so, Tim.
Not Tim, it's Tom. We work together. I am not Tim the Toolman Taylor.
Whatever. The problem is with their income statement. We'll get into the numbers, but first we need to dive into how we got here.
It's Tom. UPS has been on our watch list for some time now based on some user recommendations. Each time we looked at it though, there were too many red flags for us to add it to our portfolio.
Until now. We went through their earnings report looking for more... I'm not gonna say it.
You mean like red flags?
I didn't say it.
How about like yellow flags, or blue flags, or black flags,
Tom.
or purple flags, or lavender flags?
Tom,
or
stay on task. We went through their earnings report and found some red flags
I knew it.
as to why we didn't buy the stock last year.
What's wrong with red flags?
There's just a lot of red flags.
We can't talk about whether or not we would add UPS to our portfolio without first talking about what happened to them during COVID. During the lockdown, logistics companies like UPS saw huge windfalls in profits from online ordering. Many short-term investors originally jumped on the UPS bandwagon thinking that this influx of demand would be more permanent, but for so many reasons, it just wasn't. One huge reason those huge profits were short-lived was because the supply chain shortage followed the initial burst of online orders.
We have a similar warning with the current AI boom. And if you're curious to where we get all this information, it's from Seeking Alpha. They have partnered with us to help you get access to the same information that we use at a discount. If you're interested, click the link below and find out more. Also, if you don't have a platform which you purchase stocks, Moo Finance has also partnered with us to help you get started with 8.1% on all invested cash and all the way up to 15 free stocks. That link is also in the description. Regarding UPS, all of this shows up in the earnings reports going back to 2019. What we want you to see is the bubble and how UPS responded to the huge influx and subsequent drop-off.
This report is huge. If you go back to 2019 and prior, you can see where the numbers typically lie. Then COVID comes along and balloons everything. Based on a pure technical analysis, we can see that UPS had a fairly consistent price range until recently, and that they still aren't quite where we would like to see them at around $120 per share to meet the historical averages. We, however, do not rest our laurels on technical analysis alone. As far as the financials go, if you pull up their financial report and scroll down to their operating income, we can see the same story reflected in what we just spoke about. This also shows up in their cash flow, and their assets, and their liabilities. Another thing to note when you're looking at this financial report is that UPS appears to also be hoarding cash. Like other companies that we've reviewed recently, we believe that this reflects corporate America's concern for the overall health of the economy.
Which brings us to today and what UPS is doing to course correct. Looking at their huge earnings report from...
Hey, they got Guido! Look, it's Guido!
No.
It says Guido.
No, it's not Guido, it's PJ Guido. PJ Guido.
PJ, if you're watching this and I was you, thank you for watching. And Guido sounds so much cooler.
But it's Guido.
It should be Guido.
Anyway, this report coincided with an earnings call, which we also listened to, and here are some of the takeaways.
I still think it should be Guido.
Guido. Next time we talk to him, you can bring that up. They predicted volume to be a bathtub graph, down 30% at the beginning of Q1 and making it up in Q4. They hit the 30%, but will miss the mark a bit on the back end with a 10% increase in Q4 with earnings hitting roughly $9.4 billion. This is their forward projection. They're also selling their Coyote trucking business and retaining revenue earnings on statements until closed. So this will prop up the income statement for this year.
That said, operating at a loss is a red flag for us.
But will become a cash asset post-sale. With this, UPS will be restarting their share buyback program with the sale of Coyote, starting with $500 million this year and increasing that to $1 billion going forward. They also won the USPS air cargo shipping contract, increasing market share and revenue in that business segment. Also, they're acquiring Estafeta.
Say that again.
Estafeta. Also, they are acquiring Estafeta to increase logistics capabilities in Mexico. This will decrease time to ship for many US and Central American companies. For cost consolidation efforts, they have had 35 operational closures, including closing 5 buildings, with 35 more closures set for next year. UPS is also expanding their larger healthcare facilities in Ireland and the Netherlands to meet the demand for the increasing volume of pharmaceutical shipments across Europe and Asia. With that, they are expanding the Frankfurt warehouse, which is a major hub for Europe. On a technological note, they announced moving from a scanning to a sensing technology with RFID labels, speeding up the inventory and shipping processes. They are also working on allowing customers to print their own RFID labels.
We think operational efficiency measures like this will be a positive factor for the stock long term, even if it increases expenses in the short term.
With all these improvements and strategic moves, UPS is hoping to get back to the 2020 profits, which sounds like they're moving in the right direction.
So should we add UPS to our portfolio for month 30, and would you recommend another company for us instead to look at?
Comment below.
Stay tuned. Thank you for watching, and we'll see you in the next huge video. What's with the... Why are we doing this? Where did this come from?
I don't know.
Huge.